Dive in a little bit.
Hmm. Um, yeah, I mean that's a loaded topic for sure, but really what it comes down to is, the admitted carriers, your standard markets, which ultimately is the ones you're going to see in commercials. You're not going to see the E&S markets putting out commercials, things like that, but it's going to be your Farmers, your State Farms, your Allstates, and I mean so on and so forth. You'll see plenty in that space, but those are, uh, I guess the easiest way for me to put it is those are the ones that. The government has given precedence to, I guess is kind of the easiest way for me to put it, in that they're kind of the first go. All of their forms are going to be standardized. All of the coverages are going to be more or less the same, but also broader in a lot of ways. There's very, very few times that in my world that in the non-admitted space that we can compete against an admitted carrier. A lot of like I said, a lot of reasons for that. The standardization of the forms. Honestly, pricing is typically far lower. It goes to the law of large numbers, to the law of statistics, is what it comes down to. Is admitted carriers are going to write the business that there is a large enough sample size of the risk that they're writing that they can make they have a good statistic as to what the potential for loss is in that case. So they can write it knowing that, hey, the average loss for this particular class is going to be this. And so it winds up there's no taxes, which that's something that comes up on non-admitted lines.
Well,
Is
there's taxes, but
it's
it's built
built
into the
in,
price.
yeah,
Yeah.
but you don't see it, I guess, is
Right.
what I would say, quote unquote.
It's
But
like tax.
well, and the biggest thing you'll see, especially when you're working with a wholesale broker, is that in specific states, and most states now, I don't think quite all of them yet, but most states you have to do what's called a diligent search letter, which means that you as an agent went to a specific number of admitted carriers and they declined for whatever reason, whether it was loss history, it was the class of business, the high risk aspect of it in operations. And so from that perspective, that's where the E&S side comes into play. So your admitted carriers are your homeowners, your personal auto. You're going to see a bunch of different types of coverages that go into that. But then E&S is there to play the role of we're going to cover the things that no one else will. And in my particular case, that's something that I like to kind of fashion myself as an expert on is I like the unicorn accounts where it's the brand new. I mean, I was, one of the class of business is cannabis, which is still federally not a liked class, and a lot of carriers can't write it just because of the fact that it's not federally legalized at this point. But obviously, in this state and some of the other states, it is, and those businesses still need coverage, but admitted carriers typically won't jump on that. I mean, I know, for example, Farmers has full-on cannabis exclusion, which is standard in the admitted market. Um, in the E&S side, though, that's where we're going to pick up the classes or the tougher risks, the hairier risks, as we will call them. Um, and we have that expertise to be able to do that, which is knowing which carriers will look at it, what carriers are going to be willing to say, hey, we understand that this particular insured has 10 losses in 5 years. I mean, hopefully you don't have that many, but it happens. And, that's where a standard admitted carrier will look at it and go, you're too high of a risk. The chances of you having another claim are high, and we're going to wind up paying money on this. And as much as I'd say, I mean, insurance is still a for-profit business, pretty much across the board. There are some that are non-profit, but or mutual.
Yeah, I think
I would say I can't go too
which they
heavy into
still
that, but
they still run as a
they still have to make money.
yeah.
Um,
They
and
they do profit sharing.
Well, and one of the big
right, I mean, in some way, I mean, we still have to follow the state guidelines. So there are still rules for the non-admitted side. It's definitely not the same. I think, and I can't go. I don't want to go too far into the admitted carriers just because I don't deal work with them very often,
sure.
so I can't speak too specifically. But even in non-admitted lines, we still have to follow surplus. It's surplus lines associations. Each state has their own, at least to my knowledge, most of the states I've worked with, at least.
If there's like an issue though with the Department of Insurance in Washington, more of a federal.
So no, it would still go through the Department of Insurance. So there is still they still do have control at the state level with regards to non-admitted policies. Obviously, probably a different process. Thankfully, I've never had to go through that, so I can't speak too specific. Yeah. But yes, so everything still does go through the insurance commissioner. I mean, they're going to control not only the admitted policies, but then the non-admitted policies in a specific state. And they're going to deal with complaints at every level, even mine. And that has, I mean, I've had some things come up that have gotten close to that point as a result of one misunderstanding or another. But I think where it really comes down to in that space is that there's not the same standardization of things in the non-admitted lines. So a great example of that is like homeowners insurance right now is tough in a number of places: Eastern Washington, Eastern Oregon, Northern California, California in general, I think. Where the admitted carriers, they have also, and I'm sorry, I should have mentioned this before, probably one of the biggest things is that admitted carriers have a range of premium that they have to get it all approved by the state. It all has to be approved, every last bit of it. So that means that anytime they want to do a rate increase for whatever reason, risk in California has increased in terms of wildfire, as an example, that's something where a carrier like Farmers, and I'm sorry, insurance company carrier, the same thing, just to make sure we're clear on that. They are going to go on the admitted side, and they have to go and they have to submit a proposal stating we want to increase our rates as a result of XYZ. I'm sure it's probably quite a bit more lengthier than that, but that's kind of the general standard of that, is that they have to wait for the state to go back and approve that, which, as I think we all know, those things don't happen overnight. More often than not, they take a long time. Well, if a carrier, an insurance company is losing money hand over fist in a specific area in a specific class of business, and they're not getting that rate increase, well, what's going to happen? They're going to say, hey, we're done writing business for this in this state or this area or as a general. We saw that, I think, the State Farm, who dropped out of writing a lot of homeowners in California. That's the perfect example. And to my knowledge, I I guess not necessarily quote me on this, but to my understanding, I'm being recorded. They were asking for rate increases for many years prior to the fires most recently, and that never happened. Well, what happened is a large claim came up. They along with many other carriers, don't get me wrong, got hit for a lot of money, and they were like, hey, this is no longer profitable. We've lost too much money here. We need to stop doing this because we can't continue to do this. And there is a standard from the governmental side, both on admitted and non-admitted carriers, that they have to have capital in the background. They have to be able to pay the claims. If they can't, then they're no longer protecting their clients, their insureds. And the same goes for non-admitted. But the difference really with non-admitted is that there's no wait for any of that. They don't have to go and get approval for specific forms, rate increases. They just can do that as they need to. And that's how they can write whatever business comes across the door. I mean, I don't think I found anything that I couldn't find coverage for. Now, granted, whether or not somebody wanted to pay for it, completely different story. But forms, pricing, I mean, like I said, I mentioned homeowners. Let's say you have a dog that has attacked somebody in the past. Well, on a standard, not an admitted carrier, they might go, hey, unfortunately, we can't do that because they can't put an animal exclusion on a policy. Well, a non-admitted carrier can come in and say, hey, we'll write this for X amount of premium, and we're just going to throw on an animal exclusion. And they can do that without having to worry about approval. It's just, boom, they can throw it on there. That's where you get to those manuscript and proprietary forms. And that's where the E&S market serves a valuable place in the insurance world. Yeah. I mean, I think I've manuscripted an entire policy from scratch with, it was a London market, but I have had to do that before. That's, I don't think you see it as much in the casualty side, but especially in the professional lines where you'll have so many different varying aspects, especially now with the emergence of AI and other technology as it continues to expand.